What if there was a way to turn market volatility into a secret weapon? This strategy has quietly been helping investors build wealth even when the markets feel like a roller coaster ride. The answer might surprise you, and it's a lot simpler than you think. What is it and how can it help you? In today's video, we're going to talk about this strategy, and I'm going to introduce one stock into my portfolio. But before we do that, let's jump over, examine my portfolio, see how it's performing, buy some stocks, and see the dividends that we earned since the last video that I posted. My name is Darren. This is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners because, let's face it, there's nothing that gets you ready for that first day of your investing journey, and I do it by sharing my journey with all the ups and downs along the way. All right, folks, the summer season is coming to an end. We're coming up to Labor Day. I'm shooting this video right before it. And of course, our kids will be returning to school in a few days, next Tuesday. I hope everybody had a great summer. We certainly did. But of course, now coming into the fall months, we'll probably find ourselves cooped up inside a little bit more than we like to. So with that brings me to this week's movie recommendation. Actually, it's a limited series on Netflix. It's called Florida Man. The main character is played by Edgar Ramirez. The plot involves him as an ex-cop returning to his home state of Florida to track down a mobster's girlfriend. And when he arrives, he becomes embroiled in an effort to locate a treasure. This keeps you on the edge of the seat. It has lots of twists and turns in the plot over the limited series. It's definitely one to keep in mind when you're going to be inside during the fall on one of those cold evenings, so make sure you check out Florida Man. Now, before we talk about my portfolio and have a look at it, let's talk about what the markets have been doing, because I think it lends well with the strategy that I'm going to talk about at the end of this video. The markets have been really strong in 2024, as you can see here by this chart. But of course, like anything, nothing can last forever. So I would describe the market of late as a very bullish market. However, a lot of speculation in the market these days is saying that there could be a bit of a downturn. The Bank of Canada has been lowering rates, but a lot of businesses have actually been going out of business. And of course, when they lower rates, they're looking to stimulate the economy. So it seems to me we're in a bit of a lag. And you can see here by this chart, there was quite a dip over the last couple of weeks in my own portfolio. So I'm very open-minded to the fact that there could be a change in the market, and maybe we enter into a bit more of a bearish market. Now, that is not necessarily a bad thing, and we'll talk about this strategy that would benefit from the market volatility that I'm talking about here. Okay, so the account is up to $149,217, and it comprised of 4 separate accounts: my cash account, my kids' RESP, my RRSP, and the star of the show, my tax-free savings account. The cash account is sitting at $25,915. It's earned $84 in interest this month, and it sits with Wealthsimple, earning 4.5% interest. I'm telling you this because it's really important to have an emergency fund set up before you start investing, and that's why I share this part of the account. So if you don't have that, you should check out my video on that. My kids' RESP is up to $69,611, and it is a robo account, so I do pay a small fee, but I can't do DIY investing right now with Wealthsimple with the RESP, and so therefore I don't mind paying that small fee. Here's our asset allocation, which is breaking down the various equities that the money is invested into. And of course, the way that I deal with this account is I invest $200 every 2 weeks, $100 for one kid, $100 for the other one. Looking at the performance, we've made a total deposit of $58,315 in this account since I set it up in April of 2023. The total gains are $11,294, and the simple returns right now, like I said, the market's strong, are 19%. Since the last video, we deposited a couple $100 into the account, and that was invested into ZFL and ZEA. And then after that, another couple $100, which went into EEMV, QCN, ZEA, and QUU. This does have DRIP set up, so when dividends are paid out, they're automatically reinvested, and at this point, there's none there. Jumping over to the RRSP, it's down on the day, $70.02. Over the last week, it's down $108 or 0.61%. Over the last month, it's down $23.82. Over the last 3 months, it's up $673.57. 1 year returns are $2,629.53, which is 17%. Now, The tool that I use to track everything is Passive. And I get this account free with Questrade because I use Questrade for one of my other accounts. But if you want to get started with Questrade, I have a link right here on the description in my video description below, and I'll put the link up on here. You can get a discount and start using Passive as well. One of the downfalls of Passive is it doesn't track all of the deposits that I make into my account. And so I have a spreadsheet set up to track all of the deposits that were made into this account. So you can see in 2023, we made a total of $949 in deposits into this account. And in 2024, we made a total of $72 deposits into the account. So total deposits in the account since I opened it are $14,963. The value of the account is sitting at about $17,000. So the total growth in this account, with dividends being reinvested back into it, are $2,786. Jumping over to Wealthsimple, showing us all-time returns, it shows it at $2,519, which is a 16% return, so I'm pretty happy with that. There's only 4 cents sitting in this account, and that's because I don't put money into my RRSP right now until I max out the TFSA. Here's a quick snapshot of all of the securities that are held within this account. If you want to look back at it, I don't have chapters because I'm not monetized. You'll have to rewind, slow it down, and have a quick look if you're curious about what they are. We'll look at the activity tracker just to see what's gone on in this account since the last video that I posted. This is a great bonus of Wealthsimple. It can be used on your mobile device, your tablet, or your desktop. So we have EIT, which paid out $8.72, and we have Plaza REIT, which paid out 23 cents. And you can see here that I have dividend reinvestment set up, so they're automatically reinvested. I don't have to do anything about it, and then we just carry on to the next month. So if you want to find out what I'm doing with my spousal RRSP, you need to check out my monthly update videos. I put out the last one, number 3, and I'm working on number 4. The TFSA, the star of the show, is down $131 on the day. Over the last week, it's up $149.36. Over the last month, it's up $191.83. Over the last 3 months, this account is up $1,392, which is 4%. Over the last year, it's up $4,105, which is 12%. And of course, the all-time returns here are $4,180, which is 13%. Again, as a beginner, I'm happy with that. 81 cents sitting in the account, but I am going to deposit that regular $1,000 in there that we put in every 2 weeks. I do have stock lending turned on. Of course, that's where I loan out the holdings that I have, and it tracks for me how much I'm getting back. I've only earned $1.67 in return so far, and you can see here that Plaza REIT, REI, and TELUS are on loan, and it shows me how many shares are on loan. And then, of course, on September the 16th, I get a payout. And so we'll see that in the activity tracker. So jumping over into the activity tracker for the TFSA since the last video that I posted, we can see that Plaza REIT paid out a dividend. Here's our earnings from loaning our stocks out. We earned 21 cents and 27 cents. And then the dividends that were produced from Plaza REIT were reinvested because I do have that drip set up back into those securities. All right, so what we're going to do is we're going to deposit that $1,000 in. And like I said before, Passive doesn't track these transfers as deposits. So in that part of the Passive program, it's a bit skewed because it doesn't show the total amount of money that I deposited, which is why I'm keeping track of things on that spreadsheet that I showed you. So there we have $1,000 deposited. Now we're going to jump over to Passive, and we're going to use Passive in order to help us with our asset allocation, determining what to buy. So we can see that the accuracy of this account right now is 92%. There we have our $1,000.81 ready to invest, making total account at $36,783. Before we start buying stocks, the first thing we need to do is we need to edit our asset allocation. And so what we're going to do is scroll to the bottom. We're going to hit the edit model. And I need to pull the money or the percentage from somewhere. So I'm going to take it out of XIC, which currently sits at 8%. So what I'm going to do is I'm going to make this holding that I'm going to add, or this new stock, 1%. So that drops us XIC down to 7% allocation. And then what we're going to do is we're going to search for the security in the bar. So we make it 1%, and here it is, CNR. That's right, Canadian National Railway. And I'll talk a little bit about, after I show you what I'm buying this week, about why I'm buying this stock. So we hit our savings, and then the program will update it itself. And the next thing that we're going to do is then look at how much Passive is recommending that we buy for the various securities. All right, so here's what it looked like before I put in the trade. I've hit refresh. The program is updating itself right now. And in just a second here, there we go. So now it's recommending we buy 3 shares of CNR, and then 1 share of Plaza REIT, 1 share of QQC, 3 shares of VFV, and 2 shares of XEC, and finally 1 share of XEI. And of course, I'll spare you the watching me go ahead and buy those. I'll go ahead and do that, and then we'll talk about the reasons that I'm buying this position and what the investing strategy is that I introduced in the beginning. So here you can see we have CNR set up at 1%. After we buy, it'll show us what our actual percentage of asset allocation is with respect to CNR. So next video, you'll see what that looked like after I make the purchases. All right, so let me talk about the reasons why I'm purchasing CN and adding it to my portfolio, and more importantly, as a single stock position when I hold so many ETFs. If you don't know, CN is the Canadian National Railway, and it is the biggest railway in Canada, both by revenue and by its physical size with its rail system and the amount of cargo that it can handle. There are rail lines from Vancouver all the way out to Nova Scotia on the other side of the country, and it also has rail lines that extend down into the United States. So a very well-established railway as far as infrastructure goes, and likely not to have anybody come in and move in it. Its only competitor in Canada is CP, or Canadian Pacific Railway. They have 20,000 miles of track throughout their entire network, which also involves trucking as well. So it's not just rail systems, but then they also move some of the merchandise with their own trucks, with the containers that they're moving. So those ships come into the coast, the containers come off, they go on the trains haul the material throughout Canada, and the reverse is true, merchandise leaving the country, and some of our natural resources from some of our mines are also hauled out by the Canadian National Railway as well. The company was started in 1919, and it is currently, in terms of US funds, a market cap of $75 billion. It has 22,600 employees across Canada as of July 2024. So because it's so large and because it has such a sticky moat, and what do I mean by that? It just simply means that there aren't going to be any competitors that will come in and move in on this company other than the other competitor, which was CP. So I like those things. So let's look at a little bit more information about the company. The share price is currently trading at $158.79. And when we look at its performance over the last little while, we can see here that it has actually been trending down as far as its price in the market. And if you heard me say in the beginning of the video, we are definitely coming into a market change right now. I believe that perhaps we'll see some change in a company like CN. As interest rates drop, that means that they're going to be owing a little less money and perhaps put more money into infrastructure and adding more rail lines and new and improved equipment to move more product. The more they move, the more they make. So of course we can see that this has been trending down, and when we look at the max returns, this is one of the big things that stood out to me. So we can see that if we go all the way back to the beginning, there's just been a steady increase in their stock price. It's a very reliable company. Now, I didn't base my decision solely on this one metric. Something else to note, they do pay a small dividend. It's 85 cents currently, which is a yield of 2.13%. So some people chase yield. I'm not interested in the actual yield or the size of the dividend. What I'm interested in is whether or not the company can maintain growing that dividend, which I will then reinvest back into the stock or the position that I have. And will the company continue to grow over time? I believe those two things are true. And we'll continue to see growth with this company. Now, I compared this company against one of the ETFs that I hold, which is XIC. Now, XIC actually has CN within it. So here is the top 10 holdings of XIC. We can see there's some banks in there, Shopify, but here we see Canadian Pacific Railway and Canadian National Railway, and the weightings are pretty close. Canadian Pacific is weighted at 3.1% in this portfolio, and CN is rated at 2.7%, so somewhat close. All right, so here's a chart that I use to compare. So I've added 4 different positions. I have CN, I have XIC, and XEI, and then Canadian Pacific Railway. And what I wanted to do was I wanted to compare the performance of CN as a stock against these other positions to see if it was worth holding it. So when we look at this comparison, now keep in mind, this is a beginner's perspective. I'm not one of these guys that went to school and can analyze all of the raw data to tell me that I'm going to make millions of dollars in a few months or a few years. This is a total beginner's perspective and how I go through analyzing whether or not I want to add or remove a position. So we can see here that the blue line, the dark blue line, is CN. The lighter blue line is XIC. And the purple line is XEI. Now, XEI is a dividend ETF. So every month it produced dividends. And I wanted to compare the performance of it against CN to see how it was performing. And finally, obviously, we're introducing CP in the mix because it's the competitor. And what we see here is that CN outperforms all of these different positions as a single stock position. So therefore, for me, it was a no-brainer to add this. And full disclosure, I do hold it in a few of the other accounts. If you want to find out how much that I'm holding in it, you need to check out my monthly updates to see that. And the last thing that I like about this stock, and it's not the only thing, but it is a factor that I use to help me decide whether I wanted to add or not, is the dividend. So here, if we're using dividendhistory.org, it's a free website. You just type in the security. It'll tell you the current dividend as well as the history of it dating back. Now, I'm just looking at the first page, which takes us back to 2021, of December 2021. Back then, it was 61 cents dividend. And now, fast forwarding into September 6th, which is coming up next, we're seeing a dividend of 84 cents. So we're seeing a steady growth in this company over time with a steady growth in the dividend. And by reinvesting that dividend back into it, I believe that this is a strong single position. And keep in mind that the percentage or asset allocation that I've allocated to it right now is only 1%. And one other thing to note is that my asset allocation for the Canadian market was sitting at 16%, 8% in XEI, 8% in XIC. So I robbed 1% from XIC in order to add CNR into my asset allocation. So in the beginning of the video, I talked to you about a secret weapon that's going to help you in your investing journey, and that secret weapon is dollar cost averaging. I did say that it was going to be a very simplistic answer, nothing very fancy. So if you're new to investing, dollar cost averaging is a practice of investing a dollar amount on a regular basis, regardless of the share price. And it's a great way to develop a disciplined way of investing without all the risk. So what typically a lot of investors will do is they'll analyze stocks. If you noticed when I talked about CNR, I told you that I'm a beginner, so I don't have a lot of uber financial knowledge to give a proper analysis of the stock to determine if I invested X amount today and the market shot up tomorrow, would I make X amount for profit? Instead, I follow dollar cost averaging, and I'll explain how that works for me. So I get paid every 2 weeks, which most people do. So every 2 weeks, I have an automated way of taking my money from my paycheck, and I use a percentage. And the percentage works like this. 20% goes to investing of my salary, and of course I have to include my wife in that because it's household income. 30% goes to savings, and 50% goes to general revenues to pay the bills and for our kids and all the activities that we do and things like that. So that 20%, I then take that, so whatever my total income for the year is, I divide that by 12 months, and that comes up with a dollar amount that I'm going to invest every 2 weeks. In this case right now, it's $1,000. Now there is a bit of a caveat to this. I got started investing late in life, so we're playing a bit of catch up. So that dollar amount is not necessarily representative of perhaps what it could be, should be, or what it should have been in the past, but it's what I've chosen for now to reach the goal that we're trying to achieve. So every 2 weeks, I put $1,000 into the account. Now you guys saw in the video how I use passive with that $1,000 to break it up and buy certain securities through the asset allocation that I set up. Now what happens is, and I'll show you here, here is my total account, what it's valued at, and you can see by this rudimentary bar graph how the day-to-day changes are within that account. So where you see the rises, that's obviously stock prices going up and the value increasing. And where you see the dips, it's the opposite of that. Now, some people try and take advantage of those dips. They call it buying the dip. So on the day, they might see a stock price plummet and say they want to throw in some money, hoping the next day it will rise up and they'll make money. Now, I don't know about you, but I don't have the time or energy to do that. I work full time, I have kids, I have a family, I have to have that work-life balance, and doing that is very inefficient for me in my current circumstances. It's not my chosen career path either. So the easiest thing for me to do is, if you were to pretend to draw a straight line through this graph, every week I just keep putting in the same amount of money using passive to determine how much of each allocation I need to purchase. And what happens is, some weeks I'm buying at the higher point, and obviously where you see this dip right here, and this one was pretty significant recently, which is what made me talk about the fact that we might be heading into perhaps a bit of a change in the market where we might see some of these bigger dips. And of course, when I'm investing, if I was investing on one of those days, then that would help my portfolio increase because I purchased the ETFs or share prices at a lower cost. So the end of the day, dollar cost averaging is a great way to consistently invest in your portfolio, and it is proven over time that this will increase your earnings. I hope you liked the video. Give it a like, smash the subscribe button, share it with your friends, and don't forget, if you want to get started with passive or with Wealthsimple, check out in the video description below. Thanks for watching the video. Appreciate you guys sticking around to the end. We'll see you on the next one. But if you're just getting started out with your investing journey, you should watch this video here.